Oil prices have pushed higher yet again amid escalating tensions between Iran and the United States in the Persian Gulf.
On Monday, US Brent, the international oil benchmark, climbed more than 9% to $83 a barrel, a 15% increase over its pre-war price. That spike comes just a few days after a flurry of attacks around the Strait of Hormuz, the critical choke point that carries about a fifth of the world's oil. And the standoff has reopened a shotgun fear that once a Silicon Valley investor in 2003, the Strait's lanes are now far less safe for commercial shipping. Plur, the maritime data firm, reported only 14 ships dared the passage on Sunday, a level that's the lowest in a month. Historically, the Strait has seen more than 130 vessels a day, now it's barely a handful. Annika Bacher, Plur's head of Middle East research, said the confidence that traders had in the safety of the Strait evaporated overnight. "We're back to square one when it comes to that situation," she added. And the immediate trigger was an Iranian attack on a container ship that rode the Strait, prompting the US military to strike about 140 targets in Iran over the weekend. In retaliation, Iranian forces fired on US military installations in Bahrain, Jordan, and Kuwait. The cycle of retaliation left global traders in a state of heightened risk. Even though the price of Brent is still far below its wartime peak of nearly $120 a barrel, the market continues to react sharply to every new exchange of shots, underscoring Iran's capacity to alter energy prices with a single flare-up. And before the recent lull in hostilities, a preliminary ceasefire agreement signed last month had lifted the Strait's restrictions, freeing up shipping lanes. That, in turn, let the International Energy Agency report a sharp increase in Gulf oil exports, 6.5 million barrels a day in June, rising to roughly 16 million barrels a day, the highest output since the war erupted. Still, that figure is only about two-thirds of pre-war export volumes, and the IEA warns that a full recovery hinges on a swift de-escalation of the renewed fighting. And what does that mean for consumers? Amid the higher energy costs, the average price of a gallon of gasoline in the United States remains roughly 30% higher than it was before the war. On Monday it was $3.87 a gallon, up from $3.80 the previous week. Diesel, too, crept up to $4.88 a gallon from $4.76. Those spikes are now feeding into an S&P 500 decline of about 1% on the same day, as investors brace for prolonged high energy prices and a potential fuel glut that could turn into demand destruction. And at the end of the day, the battles in the Persian Gulf aren't just a geopolitical footnote, they're a live wire pulling on the price of gasoline, the heat of the stock market, and the heartbeat of global trade. The history of the Strait of Hormuz reminds us that a single misstep can reverberate billions. As markets watch keenly for the next exchange of fire, the price of Brent may well be a barometer of what's to come. And thank you for listening. Stay informed and stay safe. Until next time, this is your host taking you through the markets you rely on. N.